Welcome to the NWR Mining Resources Series. I'm your facilitator for today, Laura Jaquino. First up today, we have Austral Resources. Austral Resources is a privately owned Australian mining company producing LME Grade A copper cathode from its open pit mining operations. Austral Resources tenements are located in the Mount Isa region of North-West Queensland. Presenting today, we have Steve Tambanis, who is the CEO of Austral Resources. Take it away, Steve.
Okay, thanks very much, Laura, and good morning, everybody. I just thought I'd start with a very quick video clip here at the electrowinning tank house. There's a pair of robots here in the foreground, and they're stripping cathode sheets. So every one of those cathode sheets that they pop down on the pile there is about 50 kilos. You've got about 2 kilowatts of electricity per kilo of copper produced. And this is what we're doing at the moment. The mine is, or the facility is up, running and going. So I just thought it was important to sort of show that we don't actually have a plant that's been shut down for the last 5 or 6 years and it needs to be restarted, pumps fixed and all the rest of that. We are up, running, and going. So just by way of introduction, Austral's got. We're currently preparing the list on the ASX. We're doing a $30 million capital raise. We'll be commencing mining in this quarter of this year. We'll start ore deliveries to the Mount Kelly facility you see in this photo in the first quarter of next year. And we'll be very quickly ramping up to 10,000 tonne per annum of copper cathode production for the next 4 years. The project had an economic study done on it to validate the ore reserve. This was done by CSA Global. We've got an NPV of $134 million, free cash flow of $160 million over that 4-year period. But if you plug in today's copper prices, our NPV is more like $180 million. So as said, we're an operating facility about 115 k's north of Mount Isa, and we have a deposit called Anthill. It's unmined. It's ready to commence pre-stripping, fully permitted, and we'll be commencing that in the next few weeks. So what's interesting here is that we're the only operating heap leach SXEW plant in Australia at the moment, and we produce LME Grade A copper cathode, which this operation has produced it since 2007. It's produced 125,000 tonnes of copper cathode, and we're doing 40,000 tonnes in the next 4 years. So the history of this is, it kicked off in 2007. The plant was constructed by Zenco at a nominal 19,000 tonne per annum throughput. Its current throughput is 30,000 tonne per annum. That's our nameplate capacity. So we'll be running quite a bit below capacity. But that's something we'll discuss in the next few slides. I guess what's really interesting here is that if you look at the bottom left of this table, we're currently producing in the vicinity of 200 tonnes a month. It's declining production from a remnant mining program that was completed at the start of this year. We're going to start pre-stripping in October, November, December, delivering ore in January and February. But you see that we very, very quickly build up capacity of copper cathode. By the time we hit April, May, June of next year, we'll be at 1,000 tonnes per month of copper production. And with that comes a pretty good sales revenue and cash flow. And we'll talk about what we're going to do with that cash flow in a few slides. So this is a summary of the CSA Global figures here. We've got a C1 cost of about 7,300 Australian a tonne. at current prices today, we're looking at about $180 million NPV for the project. I guess what's interesting here is that we have a 5 million tonne ore reserve at Anthill. I like the fact that it's an unmined deposit. We're not going in and scavenging for remnant tonnes in old pits. And that's going to be the powerhouse or the engine driving our cash flow for the next 4 years. And we've got quite a bit to do in the way of exploration and the evaluation of our sulfide resources. We also come to market with quite a substantial copper metal inventory. We've got over 400,000 tonnes of contained copper in our JORC resource. Most of that is in sulfides and transitional ore. And we're going to have a good look at this because we have a couple of options. We can look at bringing in and developing a conventional mill, flotation circuit and concentrator to make a copper concentrate. But we're also looking at some alternate technologies as well that may see us being able to put copper sulfides onto our heap leach at Mount Kelly. And bear in mind that our Mount Kelly facility is way under capacity. We have 1,340 square kilometres of tenure. We've recently applied for an additional 600 square k's, which we're adding to the portfolio. But we have a wonderful ground position in, what's arguably one of the world's best addresses for copper and base metals. We're slap bang in the middle of the Mount Isa province here. So I think we've got sensational exploration potential. We'll get onto that in the next into the next few slides. But we're going to be giving our exploration quite a good nudge. Now, for the prospectus, we've stated we're raising $5 million of the 30 for exploration over the next 2 years. We're going to, once we hit nameplate capacity by mid next year, we'll probably crank the exploration spend up to about $10 million a year. We can manage that quite easily, as well as any debt repayments from the cash flow at full production. And it's an opportunity for us here to really have a look at what remnant opportunities are in the district. We've got 20 oxide targets within a 50-kilometre radius of the plant, but there's also a lot of juniors and mid-sized companies that have got small copper resources. There's an opportunity here to consolidate and bring some of that material into Mount Kelly, because again, we have the capacity to do so. So I like this image. This is a pit showing the pit shells at Anthill. The pink zone is the 0.2% copper resource outline. Now, this was done 3 years ago at a far lower copper price than what we have today. It's a fairly simple process to expand these pit shells to accommodate the current copper price. I think it's going to be a fairly straightforward exercise to extend our current 4-year life to 5 years by expanding the pit shell and doing a little bit of drilling in the periphery of the Anthill resource. What sort of stuns me is that structurally to the west and to the northwest, there's no exploration, this is along structural features that really should be followed up in a lot more detail. We'll be doing a lot of geochemistry here, and we'll also be testing areas to the north and the south of the Anthill pit as well. So within the first 6 months of commencing mining, we'll have rigs on site here testing this out. We'll do a lot of geochemistry, and my thoughts on the entire tenure package is that there really hasn't been enough conventional exploration work conducted here. There's so much more that can be done, and we're putting together a pretty large exploration team, and contingent of fieldies to come in and help assist us with that. I think it's worth mentioning that I'll just step back to the directors and management of the company. Dan Jancy he purchased this asset in 2019 from CST Mining. CST had owned this asset from 2010 to until 2019. They produced 90,000 tons of copper cathode whilst they owned the asset. I think Dan he picked this up at a very good price. The copper price wasn't all that good at the time, and the Anthill project hadn't been approved or permitted. But Shane O'Connell, our Chief Operating Officer, has done a wonderful job maintaining good relations with the mines department and community. We've got everything permitted in place basically to commence mining as soon as we list. So we've got Phil Thomas as our chairman, and Phil's a geologist. Jeff Innes is a mining engineer, quite seasoned. He's worked on both sides of the fence as for mining contractors as well as for miners. So I think we've got a sensational board in place to assist us with what we're doing. And it's worth mentioning that we have a superb team on site, a mining engineer, a production geologist, and metallurgists that have operated this asset in earlier days. They know it, they understand it, there's no surprises. And I think that puts us in and these three people and their teams can just run this day in, day out without any stress. I've basically been brought along to lead the exploration initiative, and this is what really excites me here, that we've got such awesome potential here, not just for the oxides, but the sulfides and regional targets as well. So I mentioned before that we've got quite a considerable sulfide resource and transition resource base. We've got 300,000 tonnes of contained metal there. I think it's going to be a fairly straightforward exercise to increase that substantially, because most of this is concentrated underneath 6 existing pits that have been mined for their oxides. So the pre-stripping's been done, the oxide's been removed, and you're sitting there having, the pits have just got exposed transition and sulfide ore within them. And what's interesting here is that the previous explorers basically stopped drilling when they hit sulfides. Now, they're only interested in the oxide ore because that's all that can be treated at Mount Kelly. We just have to bring a few rigs in there, pop a few more holes in, and I think it's going to be a fairly straightforward exercise to substantially increase that sulfide mineralization resource. Now, I mentioned before that we're looking at using, we'll cost a conventional concentrator, but we'll also look and see what can be done about putting sulfides onto the heap leach. There's a couple of methods that are being trialed quite successfully in North America at the moment. And we're in discussions with the vendors of this technology. So it'll cost us a royalty, but I love the potential here for us to be able to access and process sulfide ores without having to spend any more capital, except for a few dosage pumps, meterage pumps, and just getting straight into it. So, in terms of our exploration initiative here, it's a 3-prong strategy. So oxide ore is what we'll be chasing. I think we've got a very good target around the periphery of Anthill to get us our next year of life. But we're interested in extending the life of Austral's resources from 4 years to 14 years, if we can manage that. I mean, we've got a very good cash position in the next 4 years to fund that exploration and evaluation initiative. The sulfides I've mentioned, but we're also picking up some more tenure in the region over the next 6 months to go and have a look for some other Mount Isa style and IOCG targets. It's a wonderful address to be exploring. We have the cash flow to fund this three-pronged exploration strategy, and we won't have to go back to shareholders to ask for additional funding. That's the nice thing about this. We're self-funded, through copper production. So just a little bit about our capital structure. We're raising $30 million, issuing 150 million shares for that money. Dan Jansi will retain just under 60% of the business after listing, and $13.5 million of the 30 million raised will be to commence mining at Anthill, do a little bit of rehabilitation work on the crushing circuit, and commence drilling, commence exploration. So we've got some loan repayments to make here. The Harvey family office is going to be repaid $14 million, and it's nice to see that they're going to be retaining a 3.5% interest in the business. They've been with Dan from since 2019. They like the project, and it's nice to see that they're going to be staying in as shareholders with 15 million shares. So upon listing, we'll have cash at bank of $17 million and a long-term senior secured debt facility of $28 million through Wingate Investment Partners. We don't have to, the interest is capitalized for the first year, so we'll be well and truly at nameplate capacity by the time we start repaying that debt facility, and we'll be we plan to hedge about 30% of our currency and copper metal. So in short, we are truly a shovel-ready project. We'll be doing 40,000 tonnes of copper cathode production over the next 4 years. It's an immediate start, and we have a facility which is operational, in good condition, and with plenty of spare capacity. I'm very excited about the exploration potential here because we have targets galore within 50 kilometres of the Mount Kelly processing facility, and that's both oxide and sulfide. We're self-funded for our exploration, and this production is a runway for us to be able to review our sulfide potential, do some really good exploration work here in the region. And again, we are sitting in one of the best copper and base metal belts in Australia. So we'll be a pure copper play on the ASX. We come to market with a very good 400,000 tonne contained copper metal inventory, and I don't think it's going to take too much drilling to actually expand that materially. So that's it. Thank you.
Thanks so much for that, Steve. That was a wonderful presentation. We've got a few questions that have come through since you've been speaking. So
Sure.
The first one from the audience is, will you hedge the copper price to lock in current favourable prices?
Well, we'll do that on a partial basis. So we'll be more exposed to the copper price than not, but it's just prudent for us to hedge a small proportion. And as I said, 30% is about the level that we intend to do.
Thanks for that. And as you've gone through the presentation, it seems like there's plenty of exploration potential. So what would you say is the timeline for drilling, and what can your investors expect in terms of news flow?
I think we're going to be exceptionally news flow heavy over the next few years. I mean, We're commencing the pre-stripping during this quarter. We'll be commencing ore production in the first quarter of next year, and just cranking that through into Mount Kelly. So we've got a lot of news flow from that. We'll be doing quite a bit of drilling around the around the anthill ore body in the short term, and longer term, I'd prefer to do a lot of geochemical sampling on some of our other targets before we start poking holes into it. I think it's always a good idea to do everything in a stepped or measured method instead of just spraying holes everywhere and praying that you're going to get something. We'll use a bit of science behind the logic there, but in short, we will be drilling within 6 months at Anthill, and then very quickly rolling that across to other projects or exploration targets in the area. So news flow will be quite heavy.
Great. And last question for you today. It obviously seems like a great time to be a copper producer or explorer. What do you expect from the copper market, generally speaking, over the next 5 years?
Look, I think this is a fantastic time to be in copper. It's quite interesting that at the recent Denver Gold conference, copper was quite a theme amongst gold producers. It's interesting to see that Newmont is bragging about some of its copper potential in its exploration pipeline. And I think that, you have to look at why we're seeing such an interest in copper at the moment, why the copper price has gone up over the last year or two. And it's all to do with decarbonisation, electrification, and electric vehicles are one component of it. It's copper is absolutely essential to enable renewable energies to be installed. You need cabling and a way of transmitting this, wind power, solar power, so it's really interesting. Goldman Sachs earlier this year did a wonderful paper on claiming that copper's the new oil, and they're projecting a copper price of $12,000 average over the next 5 years. Today it's $9,000, so I hope they're right, because if they are, we're going to have a very interesting. Austral is going to do very, very well out of this. So it's a good time to be in the copper market, and I think that you've got a new driver in the. It's not just your conventional copper demand at play here. It's I think that Goldman Sachs said that there's probably 4 or 5 million tons per annum of unaccounted demand coming up over the next decade for because of electrification and decarbonisation.
Great. Well, that's a positive note to end on. Thanks for your presentation today, Steve, and we'll talk to you later at the next conference.
No, my pleasure, and thanks very much.
Thanks.